आजादी पैसे की। अभी डाउनलोड करें।
Hello and welcome. You're watching First Stick here on News 9, where we bring to you the morning buzz on the Lal Street. I am Suyash Maheshwari, and with me, as always, is Amit Ranjan. It's a Friday morning, the final trading session of the week, and the markets, they have started on a strong footing. Nifty today opened about 100 points higher, making a fresh record high of 22,794 in the opening trade itself. Sensex is also back above 75,000 mark, and the broader markets have scaled a fresh peak as well. Both indices are at record high, the small cap and the mid cap. You may wonder what's driving this market. It's the strong handover from global equities. Amit, green everywhere once again.
Green everywhere, a little bit of red in Europe, but mostly green. And the news is that Apple has announced the largest buyback worth $110 billion in its history, even though iPhone shares fell by 10%, but they have done better in China. Revenues have fallen slightly, but that is the big news in the international markets. Dow Jones closed in the positive at 0.85%, S&P 500 at 0.91%, Nasdaq as much as 1.51%. Stock 600, as I said, is in some pressure. It closed in the red at 0.22%. Hang Seng this morning is up 1.1%. The rally continues. Nikkei though is down marginally at 0.1%. Now, I'd like to mention over here that the yen volatility has jumped to the highest level since July last year, as Japanese officials intervened twice to stem the fall in the currency, which fell to its lowest in 34 years few days back. So yen is struggling, but it is a sea of green most of the places. Apple has gone up 2.2% despite the reduction in revenues.
All right, and I mean, Apple announcing that $110 billion buyback and also reporting, a 10% drop in volumes. I mean, one could say that it could be to support the stock prices, right?
And surprisingly, they are moving out of China, but it has the sales have done well in China.
Right, and of course, one of the driving factors is Apple for this big rally in the US markets as well. Also, another reason why the markets are inching higher at the same time is what Mr. Powell said just a couple of days ago. After he announced the policy decision, the interest rates were held constant, and he said that the first course of action would be a rate cut and not a rate hike. I mean, inflation picture over there still remains concerning. So, of course, it will be keenly tracked what the Federal Reserve does next. But look at what has happened in the last couple of sessions. Bond yields, which were above 4.7%, they have seen about a 10-11 basis point pullback, and they are below 4.6% now. The dollar index, which was around that 106 levels, is back knocking at 105 odd levels. And crude prices, they have slipped about 5% in just 3 sessions, and they are below that $84 a barrel mark. On a day-on-day basis, I mean, not much correction in crude prices as one would expect, because one of the reasons why we saw this fall was it was a technical correction, because remember, Brent crude in April was trading in that range of about $87 on the downside to about $91-92 on the upside. So once we broke below that range, Brent crude broke below that $87 range, we saw perhaps some bit of a long unbinding, and that's why we saw this correction, this massive correction in Brent prices. But overall, again, a falling dollar, a falling falling bond yields and a falling crude prices. I mean, this all bodes well for emerging markets and a country like India, and that's one of the reasons why we are trading at record high. A very, very strong opening. Nifty, remember, in this week alone has gained by about 2% from its April lows of about 21,777. We are up over 3%. Very strong rally, and look at the texture of the markets overall. Pretty much on a daily basis, we have been making higher highs and higher lows, so it looks like the conviction is strong. But then again, if you think about it, after that 110 point sort of a gap up opening, you'll really need to be committed on this narrative that the market will go higher from here on to participate in this upside, because when you have a muted sort of an opening, there is the market could go anywhere. There are plenty of options, right? You can either go on the upside or on the downside, but after 110 point strong opening, not much left on the table for retail investors to bet on in the normal during trading hours. But as you can see on your screen, Nifty as of 9:30 AM was up over 0.5% at 22,772 mark. Remember, we have made a record high of 22,794, just knocking on 22,800, and Sensex is also up about 0.5%, over 0.5% in fact, and back above 75,000 levels. It has not made a record high, just about 120 points shy of it. The mid cap and the small cap indices, they are slightly underperforming the headliners, but again, we are at record high, and in fact both these indices were the first to get to record high levels in this strong recovery that we have seen from April lows. Mid cap 100 index is up 0.27% at 51,252. The small cap index is up 0.36% at 17,081 mark. India VIX, that it's also inching higher. Remember, we saw this massive crash from we fell from about 16 odd levels to 10 odd levels. And now India VIX is back at about 2.38% or so. I mean, the volatility has of course seen a bit of a sharp spike, but remember 13-14 is still a comfortable zone for our markets. But again, I think one of the reasons why we are seeing this bit of volatility is because that we are in the fourth quarter earnings season, and we have some big ones today. From the Nifty 50 group of companies, Titan and Britannia Industries will report their numbers. From the broader markets, we have Tata Technologies, Aarti Industries, Adani Green Energy, Godrej Properties, JSW Infra that will also announce their Q4 report card. Now let's start with Britannia Industries for now. The Tiger biscuit maker is expected to report a subdued performance in the March quarter amid muted rural demand. Britannia's net profit is expected to fall almost 3% year on year to 542 crore from 558 crore in the same quarter previous year. Revenue from operations may grow about 2.4% to 4,119 crore during the quarter, up from about 4,023 crore during the March quarter of the previous fiscal. Margins on the other hand is likely to see a 80 basis point cut on a year on year basis, again from about 19.9% in the corresponding quarter of the previous year to about 19.1%. Now this is because of increased competition from unorganized players, and this would be some bit partially offset by a year on year fall in raw material prices. But speaking about this increased competition from the unorganized sector, a lot of the top FMCG players have actually flagged this issue. Mr. Sanjeev Mehta, the former MD of HUL, was the first one to say that the unorganized sector, the smaller players, are really not only eating away from their market share, but it is also not allowing them to increase the price of their products further on. So that's why the margins, Amit, I feel are taking a hit. But if you look at the stock price, it's not done well. Remember, Britannia Industries and FMCG at large has been under some bit of a price pressure, and in fact we have spoken about it, that it's the rural demand that is hurting the FMCG sector. But also another factor is this increased competition from unorganized player. And I'm made to believe Sudhir Bandyopadhyay, Group Chairman at IndiTrade Capital, has also joined us. Sir, thank you for giving us time here on Newsline. And we were talking about Britannia Industries. They are due to announce a report card today. A lot of these FMCG at least the top players in the FMCG sector, especially in the consumer staples business, they have flagged increased competition from smaller players, the unorganized sector, hurting their business. Now, according to them, it's not only eating away from their market share, but also hurting their pricing power. Will that be another headwind for investors to watch out for? Or if you think about it, I mean, the smaller players only enter the market when the raw material prices are low, right, which had been the case in the last few quarters. But many commodities are now on an upswing, which may weed out the small players, thereby pretty much self-correcting in a sense. What's your sense of things, sir, on this?
Suhash, I think in every segment of consumer consumption related stocks and even consumer durables. We have seen local players, smaller players entering the market, but that's par for the course. And whether it's a Surf Nirma or some other segments, the competition is there and it will be there. I think what is hurting companies like Britannia is slackness in rural demand. I think once rural demand starts picking up, and God willing, if the monsoon is good, it should happen. And then I think things will change. Competition from smaller players, regional players, local upstarts, that they will be there. They have been there, and they are there. So I'm not too perturbed with that. I think what is required is overall consumption demand recovery, particularly in the semi-urban and rural markets.
All right, but are you seeing some green shoots of recovery over there? We had the April auto sales numbers. We saw some bit of a recovery in commercial vehicle space. What are you picking up, sir? Is there, any signs of recovery happening in the rural market?
Well, of course, there are initial signs, green shoots, but probably it's a little too early to call. And Suresh, I think conclusively we will be able to tell only when we have a good monsoon.
Right.
Unless we have a good monsoon, all these green shoots will disappear in no time.
All right, and shifting focus, another company that is due to come out with its report card, it's Titan Industries. I mean, what's the expectation? Gold prices have been on the rise. That should really help the company post strong numbers in this quarter.
On the flip side, when gold prices rise, people expect that the purchases will go down. But we are out of the wedding season, and the quarter was a spillover from the festive season that was there in the quarter before that. The multi-bagger that was backed by the late Rakesh Jhunjhunwala is expected to post a revenue growth in double digits of 16%, net profit rise of 8.2% year on year, and EBITDA rise of 12%, and EBITDA margin increase by 73 basis points. Now, leading the growth is the jewelry segment of Titan, which is likely to grow 18.5%. CaratLane is expected to grow 37%. And I said we are just out of the wedding season. Tenera, which is their premium sari segment, is expected to grow 30%. The pressure is going to be on their old watches segment, which is expected to grow only 5%, and the eyewear segment is expected to grow 1%. Now, the multi-bagger that has posted 214% earnings over the last 1 year is, sir, under some pressure over the last 1 month. In the last 5 days, it's only up about 0.4%. What do you make of Titan? It's correcting, buy on dips, or is the rally round the corner?
Well, I think, what's happening is people are looking at other listed jewelry players. And if you see the rally in Kalyan, Senco, and some of the other smaller names, I think it's been stellar. People are looking at percentage growth, same store sales growth, and comparing that with Titan. It may not be very fair considering Titan is a behemoth with a significantly higher presence compared to some of these other smaller players. But the reality is the potential for growth and the way things are moving is much on a faster track. Whether you look at Kalyan, and that has been one of our favorite stocks. As far as Titan is concerned, it's a behemoth, and of course, it has always been delivering good set of numbers. I'm pretty confident they will deliver good set of numbers here. I'm expecting, actually stellar numbers from the sari segment, Tanira, and also some of the other modern jewelry like CaratLane you did mention. Some of these other light jewelry and office wear and other stuff rather than the wedding jewelry and the standard jewelry of the basic Tanishq brand. So overall, we are definitely positive on Titan, but relatively, we believe higher growth will come in some of the smaller jewelry companies like a Kalyan or a Senco.
All right, that's a view on Titan companies, sir. Thank you for giving us time here on News9. Always a pleasure speaking with you. But on that note, let's take a small break. On the other side, Kush Pora, founder of kushpora.com, joins us to give us technical analysis and where Nifty can head higher from here on, because remember, we are at record high levels. Keep watching.
produces between 1,500 and 2,000 films every year, the highest for any country. But they get ignored at international awards.
The Oscars are basically American national awards for themselves.
You're not going to be able to make a better pizza than an Italian chef. You're not going to be able to make a better sushi than a Japanese chef. Will you make better khichdi than a Japanese chef? Right? So I want you to taste my food. We are making cinema that we are proud of.
In fact, it has been 2 decades since an Indian feature film featured in the Oscars International Film category.
All these years, for much of its history, they've been just awarding their own films, and this one tiny category, Best Foreign Language Film, had the entire world frothing at the mouth to get into the Oscars.
This and more. Streaming on News 9 Plus. News is now content. Subscribe and get free vouchers.
Currently, the industry is facing a lot of challenges as far as demand is concerned. Basically, the US markets has slowed down because of high inflation.
So obviously, diamonds being a dream product, something which doesn't have a utility value or is seen as a luxury. So that obviously goes off your shopping list. That's the first item that will go off your shopping list, especially in recessionary trends.
That lab-grown diamonds are not mined, and they do away with the entire mining. So they save up on all the environmental damage that is associated with mining, and of course, the mining cost, which is why they're even more affordable.
People that is impacted by all these recessions are the artisans, are the people who work in this industry, right? But I think lab-grown diamond has allowed them to actually use their skills in the same product.
This and more, streaming on world's first news OTT, News 9 Plus. Download now.
Luxury is now becoming a need rather than something that you aspire to be. So that is adding a lot of fuel. Obviously, government has played a vital role in it.
In a city like Mumbai, a luxury home may be something upwards of rupees 10 crores. In city like Delhi, again maybe something upwards of 8-9 crores. But in Bangalore, we typically define a luxury home, anything which is upwards of about 3 crores.
It's a combination of increased wealth, availability of more luxurious homes, and simultaneously the overall economy doing better.
This and more. Streaming on News 9 Plus. News is now content. Subscribe and get free vouchers.
Welcome back. You're watching First Take here on News 9, and let's look at the levels where we are currently, because remember, Nifty this morning has scaled a new record high of 22,794. We have come off by about 20 points on that. As of 10 a.m. this morning, Nifty was up about 0.56% at 22,774. Sensex was up 0.42%. It has slipped below the 75,000 mark. We are currently hovering about 74 points below that 75,000 level. The mid cap and the small cap space, they are also trading in the green, participating in the upside and keeping the overall breadth of the market positive as well. The mid cap index is up almost 0.4% above the 51,300 levels, and the small cap index is up 0.2% at around 17,050 odd mark. I mean 17,000. I think that's the key for the small cap index, and for us to move higher from here on. But volatility is picking up. India VIX has jumped by about 2.3% this morning. It's back again, knocking at 14 odd levels. But at a time when the markets are at all-time high, the big question that comes is how far can we go from here? How much more upside, how much more legs does this rally have left? And for that, let's also bring on our technical expert, Kush Bora, founder of kushbora.com. Kush, thank you for joining us here on News 9. Sir, I mean, again, we are back at record high levels. The overall texture of the market, I mean, it has improved quite significantly this week, right? The big rally, the big relief at least, came yesterday after Fed refused to use that H word in its commentary, rate hike, and said that the first course of action will be a rate cut. For now, the stance is higher for longer. But considering the markets are at record high, we are at least knocking at 22,800. Do you think that we have enough momentum to get to potentially 23,000 or higher from here on?
Hi Suresh, first a very good morning to you and all the viewers. Always a pleasure to be here. Well, to answer your question in one word, yes, the market does have that momentum to conquer 28,000, and once that is taken out, perhaps the 23,000 also is on the card. If that 22,800 is taken out, then 23,000 might come sooner rather than later. However, the way we've put it in our advisory report today, the texture of the market is 2 steps forward and 1 step back. If you see, this market has actually been kind enough to give you that dip every now and then to quote and accumulate. But it is also prudent that you keep booking profits at higher level. If you see the kind of volatility that we've seen either on an intraday basis or let's say on a day closing basis, what's happening is that the market is giving you those sharp pullbacks as well. So if you get stuck on the wrong side of it, you might feel a little bit of an angst. Hence, our suggestion is to buy the dip, but also as a part of your strategy, continue to keep booking profits because the market is giving you that opportunity as well. Now, we believe that there is a possibility that the markets could see a near-term top around the election result, and depending on how the results come around, it could be either before or after. From a positional standpoint, the risk-reward ratio is not favorable for a big position, but given the kind of moves that we've been seeing, intraday bets or let's say weekly bets, expiry to expiry, perhaps is the way to play this market.
All right, and Nifty Bank, I mean, that has been instrumental in this recovery that we have seen from April lows. I mean, in April alone, Nifty Bank witnessed one of its best months in the recent past, surging over nearly 5%, Kush. But yesterday it was Nifty Bank that capped the upside. It prevented markets from going higher. But again, we are coming back and we are circling back to that milestone of 50,000. I mean, how difficult do you think it will be for us to climb over there? Because there are some problems. RBI has taken some regulatory actions on certain banks, which is also putting some pressure. How soon can we get to that 50,000 mark, Kush?
Well, I think what we saw 2-3 days ago, that stupendous run on the bank Nifty was perhaps one of the biggest that we've seen in the last couple of months, right? So after such a sharp up move, the follow through perhaps becomes a little difficult. Also, if you can bring up, let's say, the daily chart for the bank Nifty, late January, early Feb, if you draw a channel from there, then the bank Nifty is in an upward sloping channel. On the upside for the last 4 sessions, including the day when we hit those 11-1200 kind of a move on the bank Nifty, we've been hitting that upper band of the upward sloping channel, which means that there is resistance at current levels. Now, truth be told, 50,000 sounds like a very fancy number. For me, it's more of a psychological mark that the index has to hit. But beyond that, we're looking at a level of 52,000 for the bank Nifty. So once this zone of 49,500 to 49,900 is taken out convincingly, I think we're looking at the next level as 52,000. As I said, 50,000 is more of a shagun ka round number, right? Other than that, what we're seeing is Bank Nifty still playing catch up. For 12 months from here on, if you see, Nifty is up close to 26-27%. The Bank Nifty is up only about 16%. So there is a lot of catching up that the Bank Nifty has to do anyway. So what we are seeing in terms of this current rally is more of catch up. While it has been helpful in terms of pushing the index also higher and the market sentiment, I think 52,000 is the next level to watch for. We think there is some room on the upside. Also, I'll take 30 seconds more. With the when you mentioned about RBI playing the strict regulator that it is sometimes said out to be, I think what it's done with Bajaj Finance today is perhaps a more positive. because what the market is reading it as is that, if you do follow, the steps, or, you do consider the suggestions that the RBI is making, they are more than happy and more than willing to, lift, any kind of restrictions. So that is also being taken positively. And, we've seen time and again, whatever checks and balances RBI has brought in place has only been for the, consumer benefit. So you can't really complain there.
All right, and speaking on Bajaj Finance, of course, we are absolutely on point in pointing that out, that, because a lot of the analysts were saying that, they were scared about how much time RBI will take before it, lifts those bans. It only took 6 months. Remember, before that, HDFC, I think it took almost a year more than that before RBI lifted its curbs on HDFC Bank. So a big relief coming in from for Bajaj Finance, and it has rallied nearly over 6% in fact. And just to jog back our memories, RBI on November 15th, 2023 directed Bajaj Finance to halt loan issuance through its e-com and Insta EMI cards. The central bank had imposed these restrictions due to a lack of transparency and disclosure of conditions like fee charges and a recovery practice in a key fact statement, which is a crucial requirement for digital loans. But Kush, I'll come back to you. We are seeing a strong resurgence in Bajaj Finance today. I think we are back at the levels where we were on November 15th when that big drag came along. Do you think this momentum could continue and perhaps take Bajaj Finance higher from here on? Because it's the big news is certainly a sentimental booster for the investors.
Yeah, I think you pointed out correctly that it's a sentimental booster. Now, I'm not sure if, if this rally has more steam to it. A couple of points. One, that, now with the competition intensifying, something like a Jio coming around, you'll have to start questioning whether, Bajaj Finance can really give you those kind of returns that it did over the last decade or so. Perhaps a little unlikely. Can a Jio do that? Maybe not to the same magnitude, but perhaps better than Bajaj Finance. Hence, that competition, is very clearly kicking in, not only in terms of the business, but also in terms of the capital allocation. Also, what happened is that, this stock has been under pressure, and every rise that has come around has been seen as, a selling opportunity. Now, as a standard disclaimer, I do hold Bajaj Finance in my portfolio for a while now, but I have significantly pared, my own holdings in this and shifted, some of it to Jio. Now, also from a technical front, if you draw a trend line from the October highs, from the last year October highs, it's almost precisely in that, downward sloping trend line that the stock has hit the high today, 7,400, and then slipped lower from there. So while you're seeing, a 5.5% uptick, the stock is actually about a couple of percentage points down from the day's high. Now, this is, I think, the theme for the stock, until it crosses that 7,400 level convincingly, sustains above that for a while, I think it's going to remain under some sort of a pressure. So for me, what I would do is, if I have holdings in Bajaj Finance from, let's say, slightly lower levels, I would take this opportunity to book profits partially, if not fully.
Right, book profits partially if you already have holdings. But again, the big news that came out today, RBI lifting curbs, is certainly a sentimental booster and could take the stock higher from here on. Kush, please stay with us. We'll come back to you after a short break.
$20,000 people dead and counting. What's happening in the United States of America is unprecedented. You will have to pay for this. Why is the state not looking at putting an embargo on that?
As a Telangana person, I will not accept.
How do ordinary folks deal with this?
I try and convert almost everything in a kind of a mathematical formula.
You should always stretch more than you can reach.
Listening is very important.
Because if you don't listen, how would you know what the problem is?
Everybody who's working in and around me, their personal well-being is also a responsibility that I carry.
Great leaders have shared vision.
This and more. Streaming on News 9 Plus. Subscribe and get free vouchers.
Welcome back. You're watching First Take here on News 9, and remember, we are in the middle of the earnings season. Today we have some big ones from the Nifty 50 pack of companies. Britannia Industries and Titan will announce their numbers, and Aarti Industries, JSW Infra, Godrej Properties will be some of the companies from the broader markets. They will also report their Q4 report card. But the action has been also very stock specific because a few key heavyweight companies reported their numbers after the market hours yesterday. Coal India was one of them, and amid the stock is trading about 2% higher this morning. As far as the results, the report card is concerned, it was a bit of a mixed bag.
Now, it's a Maharatna company like you of the government, like you mentioned, and there have been price cuts in coal. But the numbers that have come in, they have been in line with what the market expected. As far as net profits were concerned, they were expecting around 27%. Net profits have come in year-on-year increase of 26%. Where there has been a discrepancy is revenues. Now, revenues have gone down year-on-year by 2%. The market was expecting an increase by around between 8 to 9%. EBITDA was expected to go up almost 45%. It has gone up only 21.5% year-on-year. Now, despite the cost cuts, the increase in profits has been on account of cost efficiency and benefits from changes in accounting for stripping activities for their open cast mining. Kush, where do we take Coal India from here? They have not come up in line with what the market expected as far as revenues are concerned. They are going down. Do you expect this just to be a blip, or it is expected to rise post elections with new infrastructure projects coming on?
Yeah, I'd go with the latter. Also, the fact that we're fairly bullish on the entire power space. If you look at a lot of names in this space, how they've been doing well. I don't think Coal India will remain an exception to that. We've seen some sort of a consolidation in this stock, but that has also been with a positive bias. For me, despite the kind of mixed set of numbers that have come out, what's encouraging is that 460 was a line in sand that the stock wasn't able to take out. Today we have been today the stock has been actually able to move past it and sustaining above it. So I think perhaps the momentum could be a little miss here, but on the whole we think that the stock is the trajectory for the stock is upwards. From a near-term perspective, we think 485 to 500 are the levels that the stock could perhaps head to. Most likely, as you said, perhaps post-elections once some new projects are announced.
Okay, and Kush, but before we let you go, what are your picks for our investors today?
Sure, a couple of them. First is BSE. Now, despite the kind of news that we had seen, the stocks actually recovered quite smartly in the last couple of days. I know at the moment the stocks, marginally in the red. But overall, we think if someone wants to re-enter, someone had missed out on the last, rally that had come in the stock, I think BSE remains a buy from, a positional standpoint more so. 2950, 3050 are the targets that we're looking at. 2700 to 2750 is the support zone. So that should act as your stop loss. The other stock that I have is Hind Copper. Here too, we are seeing some cuts today, but that is more of, a profit booking, a consolidation event. Other than that, the stock is in an upward trajectory. 398, 405 are the targets, and 380 to 385 is a support zone for the stock. So that should act as a stop loss.
Alright, those are the top picks from Kush Bora. Sir, I have one final question for you actually, because if you look at the markets now, they have actually paired most of their pre-opening gains, and whenever the markets, they see a very strong start, possibly a gap up opening or a strong start like today of about 100 points, what should retail investors do? Because if you are really betting on the upside, you need to have very strong conviction after a strong opening to perhaps try to ride the market on the upside, but there is not much left often for retail investors. What's your advice for them, sir?
So yes, it's almost interesting that it's happened more than a couple of times now. That I have a 15-20 minute interaction with you, always a fun one. But when I start the interaction and by the time I end it, the markets have perhaps acted exactly in line with whatever we discussed. So perhaps that's a lucky charm for me and perhaps for your viewers as well. See, I just said that this market is in a 2 steps forward and one step back kind of a setup, right? Earlier in the morning, one of the media outlets had mentioned that if you have long positions from yesterday, book them out early in the morning and start your weekend early. The 2 steps forward, 1 step back theory is also playing out. I think you should have conviction and belief in the market. I don't see a very big downside in the market, at least until the election results are out. Unless something happens with the geopolitical front, it's a different story. But I would buy this dip. I would wait for maybe some more time. Perhaps the 20 to 600, 20 to 650 kind of a zone is a stronger buy zone for the market. But I would go out and buy the dip on the Nifty and on the Bank Nifty both and hold on. The kind of moves that we've seen in the last couple of weeks does put in some sort of a confidence. It was only the DIS that were parking in money. FIIs, although small in magnitude, have also started trickling in. So that will also perhaps help the market cause. So buy on dip still remains, but I will reiterate, continue to book profits as you go along, because the markets will give you these kind of sharp down moves also.
All right, continue to book profits as the market moves along. But, as Kush brilliantly put it out, the market is moving 2 steps forward, 1 step backward. The bias remains on the upside, but whenever there is a strong opening like this, perhaps, one should wait and watch and let the dust settle a bit. Let markets cool and settle off a bit after that pre-opening sort of a hype, and maybe then take a position or a call based on what you are feeling. Kush, sir, always a pleasure speaking with you. Great insights from you as always.
Likewise. Have a great weekend.
You too, sir. But again, before we wrap things up, let's look at the numbers, because, again, Nifty has wiped off most of its early morning gains. We opened about 120 points higher on the 50 share index. We have pretty much fallen below the 22,700 mark. We are just trading below that, very close to the day's high. Nifty is still in the green. It's up about 0.2%. One of the reasons I think the market is correcting today is because, the banking stocks, and remember even in the last session, it was Nifty Bank that pretty much capped the upside for Nifty, because ICICI, Kotak and Axis were the biggest drags on the market. On the other side, it was partially offset by HDFC Bank. This morning, it's ICICI Bank and Bajaj Finance that is providing that upside push, whereas your HDFC Bank, Kotak Mahindra are providing that downward pressure on the market. So what happens with Nifty, Bank Nifty specifically, will have major implications on what and where Nifty is heading from here on. Remember, Bank Nifty 2 is very close to its record high levels, and we are coming off a very strong month for the banking index. In April, Nifty Bank rallied almost 5% compared to about a 0.7% rally in Nifty. So we are at elevated levels, and there are some bit of regulatory concerns. Remember what happened with Kotak Mahindra Bank. So there is some fear in the system that it's not just NBFCs or the smaller banks that will be affected by these curbs, or will not the large private banks will not fall under this restrictions from RBI. RBI saying no, hold on, we'll wherever there needs to be a course correction, we'll step in and ask you to do that, and that was with Kotak Mahindra. But again, remember what has happened with Bajaj Finance today. The curbs are going to come along the way, but if you take those self-correcting measures, RBI will be equally quick to remove those curbs for you, and that's what we are seeing in Bajaj Finance. Remember, the stock is up about 6%, providing that major push for Nifty 50. But that's all we have in this edition of First Take. We'll see you at 4 p.m. on Last Take. Coming up next is World Business Report.
अगला स्टेशन विश्वविद्यालय है। दरवाजे बाईं तरफ खुलेंगे।
Gone are the days when starting a business meant burning a hole in your pocket, or taking a loan for that matter, and being that one-man army in your own firm. Today's Gen Zs are breaking all the norms.
Gen Z